You've been told forever that 401ks and IRAs save you money on taxes, but here's the truth. They don't save you a dime. They just delay the tax bill till later. And with tax rates likely rising in the future, you could arguably say you're going to pay more in the future than this. So let's just break down exactly why deferring taxes might be the most expensive myth in personal finance today. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you if you want to get your money working harder for you so you don't have to work so hard for your money. You want to become work optional, where you have enough passive income so you can work because you want to, not because you have to. But more importantly, it's just not about you getting rich. You want to live a rich life. Yes, of course, you want that financial freedom. You want to be able to do what you want and do with those you love, right? But most importantly, you want to be able to create a ripple effect in the lives of others because as you're blessed financially, you have a greater capacity to help more people. That is exactly what we're here to do today. Thank you for tuning in, binging, and sharing on these episodes, allowing me to create that ripple effect through you. Again, appreciate it so much. You guys have been such great, loyal followers for the last now 10 plus, now going on past 11 years. So thank you so much. Hey guys, the time is soon at hand. We're about to pre-launch our book, Work Optional Blueprint. Be sure, if you're not subscribed to our mailing list, go to moneyripples.com to watch for those updates because you'll be able to order your book soon. So be sure to check that out. All right, so let's talk about this 401k and IRA myth, right? We've been hitting myths for the last few months or so now. This is like the 20 some odd myth that I've been addressing. And this is a big one. And the reason I know it's a big one is because even just as recently as this week, I went to a conference in Dallas, a real estate conference, right? And there's a lot of these guys there. And lo and behold, although these guys are making literally millions of dollars in real estate, they still have a financial advisor that's telling them, you need to save money on taxes. You need to defer your money into your 401ks and IRAs. And so a lot of them are doing like solo 401ks. Some of them are doing like IRAs, but they're doing like, SEP IRAs and things like that, especially as business owners. But I'm here to tell you, if you're a business owner, especially, you have zero benefit. And even if you're not a business owner, even if you're an employee, you may get zero benefits from your 401k or IRA, not just from what I mentioned earlier, but just on taxes alone. So let me talk about why that is. All right. So first and foremost, right, we got to look at this situation like 401ks and IRAs. How are they taxed? Now, we all know that when we put money in 401ks and IRAs, at least I shouldn't say we all know, but many of us know, it's common knowledge that you put in tax deferred money or pre-tax money into your 401k and IRA. So when you're putting that money in, if you're just taking out of your paycheck, that's money that's not being taxed. You've been told that you're getting a tax reduction or a tax deduction even, right? Which is technically true. But the way to look at it is this, it's actually an income deduction. What they're doing is they're saying, hey, this is income that was going to you, but we're not taxing you today, but we will tax you in the future. Now, the benefit they'll always focus on is you get a tax deduction now, tax savings today, which is what everybody wants, right? And then it grows tax deferred, right? It doesn't get taxed while it grows, but then when you take it out, then you get taxed. Now, I'm not talking about the Roth IRA yet. That's another story we'll talk about later. But right now, just the 401ks and IRAs, because that's the one that everybody's saying you're at tax benefits. You don't get any tax benefits from the Roth IRA, but you do, however, get quote unquote tax benefits from contributing to a 401k or IRA. And this is why. And this is true if you have a TSPs or 403Bs, whatever your variation is, they're all government programs. Now, understand this. One of the reasons why you're not taxed, and this is also true with 401ks, one of the reasons why that someone can sue you and not get to your 401k. Remember, other than life insurance, this is the only other place, the 401k is the only other place you have liability protection from lawsuits. Why is that? Because you are not the owner of the policy. You do not own your 401k policy. You are named as a benefactor of the policy, but you are not the owner. The US government is. This is why when people sue you, especially with the 401k, they can't get to it. Now, IRA money, yes, they can. 401k is a little bit different, right? So just understand that you don't own a 401k. IRAs, you do. It's an individual retirement account. It's in your name. That's one thing. 401ks are not. It's owned by the government, first and foremost. You are just the benefactor of that money. If you ever want to question me on this, look it up. It's there. And it's common knowledge for many financial experts and professionals. They know this. Okay. So anyways, moving back to this. So again, you're putting in pre-tax dollars. It grows tax-free and then it comes out taxable, right? And I say tax free, really, it's just tax deferred. That's why they call it tax deferred, because you're saving your taxes down the road. The question is, where's the better place to have your money? Do you want to save taxes now or later? Do you want to pay taxes on the seed or on the harvest? This is the big question we all have to ask ourselves. Now, many people will say, oh, I want it now, especially business owners, like, I need any tax deduction I can get. Well, let's think about this. Is it possible that the US government literally banks on you believing this lie, this myth that you are saving on taxes now? Because think about this. Right now, in your current state, let's just say, I'm going to start with you that are not business owners. If you are an employee of a company, where are you getting all your tax deductions? You don't get very many. Where do you get them from? You get them from mortgage interest. If you're paying mortgage interest, you get them from having children, minor children in your household that you write off on your taxes, even some that aren't minors anymore, but you're helping support them. And then maybe charities, charitable donations. Other than that, you don't get a whole lot more of tax deductions, do you? It's really mortgage interest, kids, and then charities. That's it. Unless you have a side hustle, that's pretty much all you get. What happens later in life? Do you have much mortgage interest to write off? Now, if you keep refinancing your mortgage, yes. But if you're doing the typical thing where you're paying down your mortgage over time, if you don't have a paid off house, you will have a house that's close to being paid off by that point. How much are you paying in interest on your mortgage? A lot less. So your tax deduction goes down. What also happens? Are your kids, are they still home? Possibly. But it's very possible that even if they are living at home, they probably have their own jobs at some point. And so by the time you get to that retirement age into your 60s, you're going to realize you don't have that tax deduction either. You might or might not still be donating to charity, and that's fine. But think about it. Your two biggest write-offs, mortgage interest and children, are gone. Completely gone by this point. Now, the only reason you might pay less in taxes is if maybe you actually have less money, right? You're actually pulling off less income. Now, a lot of times I'll tell you, you can live off 70% or whatever, but I'll tell you this, any retiree I've ever spoken with, and I'm sure this is true if you've spoken with retirees too, most of them will say, yeah, I spend just as much, if not more than what I used to spend. My expenses don't really go down because even if I think they go down, well, guess what? I still have health type coverages, whether it's through Social Security, Medicare, Medicaid, or whatever it might be. I still have health expenses, and there's still more of those medical expenses coming. In fact, that's one of the biggest expenses that most retirees never count on is how much they might have to spend on medical. Also, you have other things happening too. You might actually want to enjoy your life, right? So yes, you might have less expenses. It's possible. But the likelihood is you don't want to have to reduce your lifestyle. This means you're trying to plan for failure later in life. You're trying to plan to say, I just want to live in a strict little budget. Oh, by the way, I still have Social Security coming in. But guess what? You can also still get taxed on money you pull out of those retirement accounts because it hasn't been taxed yet. And when you pull money out of those retirement accounts, you're taxed at the highest tax bracket, which is ordinary income tax. That is the highest tax you can get taxed on. Now, here's another reason why you might pay more taxes in the future. Inflation. Inflation alone, even if they don't change the tax rates, inflation alone would actually require you to pull out more money just to live. So for you to do that, it requires you to pull out more money, which is more income, could potentially put you in a higher tax bracket. Now, let's look at history, right? The question you have to ask yourself is, are taxes going to go up or down in the future? Is it possible they could go down? Yes, of course it can. But what's the likelihood that's actually going to happen? Well, let's take a look here. So right here is the top marginal tax rate. What's the top tax bracket that we have here, right? You can see this goes all the way back to 1913. We've literally had over 110 years of this federal tax. Now, you'll notice that back then, the top tax rate was 8%. That was it. It was anywhere from 0 to 8%. And even back in 1913, you had to make at least $500,000 a year. Think about this. $500,000 a year in 1913 was like making tens of millions a year today. Now, you might think, oh, Chris, you're overestimating. I don't think so. If we go off real inflation rates, that probably is literally into the tens of millions per year. That's not the case today. The top marginal tax bracket's way less. You don't have to earn nearly as much to be able to be in that top tax bracket. You can get close to $1 million a year and still be there. So things have changed a little bit. Now, also look, it went way up there, especially in World War II. Then it came down. Then it went up again after World War II and going into the 60s, 50s and 60s, we had really high tax brackets. Even in the 70s, you'll see it kind of had a blip there at 1970, but you'll see like the top bracket was around 70%. This is when executives were allowed to contribute to a 401k. The 401k was meant for high income executives, just like this, who was in that top tax bracket saying, listen, based on what the taxes are today, I'd rather get a reduction. I don't want to pay 70% of taxes. I'll reduce it in hopes that I'll have a break in the future, which, by the way, once we got into the 1980s, it finally did, right? And even going to the 90s and 2000s, you see it's kind of been similar to the same. It's got a little bit higher before under Obama, not much higher though, from the top tax bracket. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. But then, of course, it came back down with the different Trump tax plans, right? And so right now, compared to history, this is one of the lowest times we've been in. And remember this, right now, with the government spending happening, even though they were trying to do Doge and everything else, the spending is still out of control. It's still accumulating. And the interest that we're having to pay on our debts is now getting out of hand. It's at the point where now we're not bankrupt as a country, but we are at a point where that debt is not coming down fast. What do they have to do? They have to do one of two things. Either somehow the government generates more revenue, could be through tariffs, but that could cost us a big economic recession or depression as a result. Or two, they increase our tax rates. Now, tax rates aren't the most popular thing. What the government's been doing a lot of is they've been printing more money to make it basically worth less, devalue our dollars, which is not a good thing either, right? That just creates more inflation anyways. But that's one thing they've been trying to do. Now, eventually, we're probably going to get to a point where there's going to be politicians saying, listen, tax the rich, give to the poor. It's getting ridiculous. We got to raise taxes, tax the rich, which has always been the case. This is all, just so you know, ever in all of these tax brackets that you see here in history, there's always been a higher tax bracket on the rich, always. But there's also been taxes on the poor and middle class too. And so you still have to pay more as well, even if you're not in the top tax bracket. So again, the question begs to ask, are we going to have higher taxes in the future or lower taxes? And you might look at this and say, well, can they go much lower in the current situation? I don't think so. This right here is why I don't think you're saving any money from 401ks. Now, of course, a 401k, right? There, yes, you get the company match that might help pay your taxes. But remember, the 401k, we talked about this before, the funds don't do a good job. They're actually underperform the stock market. So it comes right back to the same point. I could just do an IRA, invest from there, and use that money to invest in the stock market. I'll probably get similar returns to getting a match on my 401k. If you're questioning me on this, go back. We had a whole episode or a couple episodes talking about this very point. But when you're a business owner, let's get to you guys now. Because for employees, again, you don't have many tax write-offs. You're going to wait till the future to then have less tax write-offs and possibly a higher tax bracket. Don't you think the government's literally banking on this point, playing off of your ignorance, playing off your emotions of savings today for having them to get paid more tomorrow? The only people that actually got away with this were the top level executives in the 1970s. Once they made this, especially with the 401k, right? When they made this more mainstream in the mid 1980s, well, that's exactly when we didn't really see taxes reduced for us. They kind of really leveled off at the top tax rates. But again, we still had inflation. We still have those issues coming up. And the question is, are they really raising those brackets? Because they do adjust them for income as time goes on. But is it really enough to account for inflation, especially inflation on the goods that we spend on? Because remember, what they report as inflation is different than the actual reality of inflation. They literally fudge those numbers so they could pay less to Social Security. This is why I don't trust the government. Also, remember too, IRAs and 401ks, they can change the rules at any time. They can change the rules at any moment. They can tell you have to wait longer to get to the money. They have to tell you, hey, there's bigger penalties. Remember, they just loosened the penalty rules after 2020, saying, okay, now you don't have to wait till 70 and a half, where they required you to pull out a minimum distribution, right? If they had to pull out a minimum amount, or they would tax you 50% penalty of what you should have pulled out if you didn't pull out. So even if you didn't need the money, you had to pull it out. Well, now they made it 72 and a half. Okay, great. Thank you for that 72 type of thing, but still it's there and they can change it anytime. You don't get a vote in it. They get to change the rules whenever they want. So you're at their mercy, whatever they need, how it's going to pay their bills. That's the risk you're dealing with. Furthermore, if you're a business owner, you get no tax benefits. There are none. Think about this. You literally, even if you're paying a 401k, to me is ridiculous. You pay your own match. Okay, well, you still have to pay taxes on that match. So you literally got no benefit. It's one thing if the company pays your match because they're paying you that money and then you have to pay tax on that money later on, but at least they're paying you money that should have been wages in the first place. But that's what they're doing. For you as a business owner, you get no benefit. You're just kicking the can down the road, which once again, you're probably in the lowest tax bracket now because you got all the business write-offs, all the things from your business, all those benefits you get, plus your kids, plus mortgage interest and everything else. Well, down the road, let's just say you decide to sell off your business and you lost those tax benefits you get from your business. What if all of a sudden your kids have moved out? What if you don't have mortgage interest anymore because you paid off your mortgage, just like every financial advisor tells you should? You no longer have tax benefits. Why would you invest in a 401k or IRA? Now, this might beg the argument for a Roth IRA. Roth IRAs could make more sense, right? You use after-tax dollars, gross tax-free comes out tax-free. The only issue I have with the Roth IRA is, once again, it's controlled by the government. They can change the rules whenever they want. You can't have a say in that matter. So if they decide to push back ages, they decide to change penalties, or even say, you know what, if you're in a certain tax bracket, you don't get the tax-free savings anymore because we don't like the rich having too many benefits, right? They can change those rules whenever they want. That's, again, why I don't like it. This is, again, why I keep going back to life insurance. When I go back to whole life insurance, where there's a contract, I get the tax rules at the moment that I get in. Even if they change them later on, I'm grandfathered in. And I know that I can put in more money than a Roth where, well, let's be honest, I can't even qualify for Roth because I make too much income. I have to do the backdoor Roth, which of course they can close that door at any time, right? But again, I make too much money to even contribute to a Roth IRA. And even if you can contribute to it, $7,000 a year, whoop-de-freaking do. That's not going to do anything for your situation, right? You have to start saving from before birth. You have to be a placenta starting to save into a Roth IRA to hopes that you might have more money. But again, you're still fighting inflation and everything else down the road. And of course, here's the biggest thing. People talking about buying for their grandkids. Well, in 60 years, don't you think that the rules might change on a Roth IRA in 60 years? I mean, they've changed rules before. Why wouldn't they do it again? So why would you trust it? So again, this is why I keep going back to life insurance. So just so you know, Roth IRAs, Roth IRAs might have a little bit of a benefit. Those are, I would say, of all of them, those I would prefer of the different IRAs and 401ks, 403bs, TSPs, all of that stuff. But if I were to put my money anywhere, I'd rather have control of that money now, get tax-free access to it now, which is the only place I can do that is inside my life insurance. Anywhere else, I can't trust. And by the way, I do have IRAs, but I don't count on that crap. I don't count. I just hope that I preserve it, that it doesn't lose money, right? That's why I don't put it in the stock market or anything like that. But I have an old IRA that's from an old pension type thing. Well, not a pension. It was a defined benefit plan. Sorry, defined benefit plan, which is, of course, like an old company one. I have that, but that's it. Again, it's there. I can probably eventually self-direct it at some point, but it's kind of locked up. But other than that, I have no, I never actually contribute any of my own money. That was something that they contributed money for me. I put 0% in myself. They put all the money in. So that's the only time I think 401ks, even IRAs might make sense, is if a company's saying they're going to contribute for you. Well, great. Give me that free money. I'll take it. But at some point I'm going to take that money back out and use it. So there are no tax benefits, in my opinion. Your one small glimmer of hope might be if tax brackets go down or your financial plan fails. And if it fails, do you really want to plan for failure? Or do you want to be wealthier in the future? Do you want to have more money than you need versus trying to live on a tight budget? That's a question you got to ask yourself. And if you want a better solution, better answers, there's a lot better things you do. And yes, you can actually self-direct IRAs and move them into other places outside the stock market, especially if you're afraid of losing money. So there are other options that you could be doing there. If you want to know more of those, just go to moneyripples.com. Feel free to go do that work optional calculator and book a time to talk with somebody about that. In the meantime, just remember, it's a flat out lie. 401ks and IRAs, there are no tax benefits. They're just a tax. You're not deferring your taxes. You're literally deferring your income to be taxed at the highest bracket down the road. I'd rather have my money in places like real estate where I actually get some tax benefits. Even if I do get taxed down the road, I'll still save more money on taxes than you will in your IRAs and 401ks. That's how I prefer to do it. It's your choice what you want to do. But I'm just telling you, there's better options. So go and make it a wonderful and prosperous week. We'll see you later.